Okay, good morning, everyone. Today is Wednesday, April 6th. Michael Boutros here for this live intraday strategy webinar on SB Trade Desk. Great to be with you guys here this morning. So we're pretty light on data today. There's not much on tap until about 2 p.m. You do get the release of the FOMC minutes. Now, as far as the minutes goes, guys, I don't really think we'll get that much today. Keep in mind that the last FOMC policy meeting was a quarterly meeting, which gave us the quarterly projections as it pertains to interest rates, growth, unemployment. We got the subsequent presser with Janet Yellen. So it's hard to see today's minutes really revealing anything new. The only caveat is on the back of comments made by Yellen last week with regards to the openness of the committee to embark on additional QE measures. Now, if any conversation comes up within the minutes to show that QE was actually an open discussion at the last meeting, that could be what sets the dollar lower or gives us some volatility on some of these dollar crosses. But barring that one sort of scenario, we're not really expecting too much today. So that's at 2 p.m. Ahead of that, you do get the DOE, Department of Energy, crude inventories at 10:30. We highlighted that yesterday, specifically on the CAD pairs. We'll want to see how that also pans out. Okay, so as we go through this, we want to talk about the Aussie, Loonie, CAD, Yen we covered yesterday. We had radar charts on Sterling, Sterling Yen, and Crude. I also just wanted to touch really briefly on Kiwi. We put together that slope yesterday. It's still holding the same exact near-term slope. And the CAD crosses, we already talked about that. All right, so let's jump in. Before we do, real quick look at the dollar index. So the dollar so far today, strong against most of its major counterparts, save the Aussie, which is up just 0.403%. Excuse me. Not really expecting much there. We'll go over that trade. British pound, biggest loser on this session. So if you guys noticed on the radar charts yesterday, both for pound dollar and pound yen. Tibor, Aussie Swiss, if you have time. Yeah, for sure. Let me jot that down. Minho, great to see you, sir. Welcome. As far as the dollar index is concerned, so the British pound overnight did see a break. So here's the radar chart from last night. We'll go over this in just a moment, but you had some key confluence support on pound dollar. You had some nice confluence support here on pound yen. Both of those gave out and did achieve the final target to the downside on pound yen, and the target to the downside here. Major key support now for British pound. So we'll go over those trades in a moment. First things first, let's go over yesterday's update. Okay, so before we jump into the Aussie, the dollar index, just to recap once more. So we're looking at this basic upper median line parallel. You have a 618 retracement of that decline off last month's late high. And you also have that longer dated 50 off the low from May, converging in this region at like 11,965, 11,970. This has been, and remains our bearish invalidation level. All right, so if we do get a spike into that region, we want to be very mindful of the fact that, again, you're coming in some big resistance, structural resistance for the downtrend, and we'd be looking for possible short exposure on a spike into that region. Here's what it looks like on the 30-minute chart. Also pretty clear. So if we go a few days back here to the 3rd, here's the dollar index look like earlier in the week as we were just opening up on Sunday. A break of that downside descending median line formation last week shifted the focus higher. You were getting some divergence into those lows, and the rally, again, still got a ways to go before you hit that upper median line parallel. We also had a swing low here at 11,952. So you could get one last stretch higher, guys, to achieve, again, a rally into this region before we turn over again to the downside. So immediate focus still leaves room for another upside thrust. Largely speaking, we'll be looking for that to peter out here today in the dollar index. If we break, okay, there's really not much on tap. There are some soft targets that I removed from here yesterday just because I think that we're stacking them up too tight here. There's a 618 that comes in right around 11,967. But essentially a break of this, guys, and you're looking for a larger scale correction. So you'd be looking for basically 11,990. The opening for last week comes in right around 12,000. And 1230, obviously last week's opening range high and the previous week's high as well. All right, that's sort of the unfavored scenario. The favored scenario is that we get one more high here into the U.S. trade session and start to look for some possible short triggers there. Any questions on the dollar index before we move off? The level's been pretty clear. Again, a quick reminder, you can take snapshots at any time, guys, of any of the charts that you see here by clicking on that camera in the top right-hand corner of your screen. Okay, so now that we have a picture of what the dollar is doing, and again, you're coming up into resistance, the breach above this does keep the topside focus in play. Here's what Aussie dollar looked like last night, and here's what we look like now. So we've been holding within the confines of this channel formation here, or median line formation, whatever you want to call it, off of last week's highs. Heading into this low, we were talking about this here in the webinar yesterday, guys. It turned out after the webinar closed, you got one last spike into that same region. You had the 236 longer term basic retracement, basic channel or slope support. And again, heading into the U.S. session, you did get some near-term triggers on the 5-minute charts that put us on the long side. The initial target for this was just 75.50. Okay, so we're kind of not even in this anymore. Looking for a break above this region to really validate a near-term reversal in the Aussie. Here's what it looks like on the daily chart. Okay. We came yesterday right into that 75.10 target. That's a basic 236 at the advance. This is a retracement, guys, of the entire 2016 year. These yearly retracements tend to be very, very strong reactionary levels. I just saw a tweet here. I don't know, Mitten, or if you're in the room or not. Thank you for that. I appreciate it. Missed the webinar yesterday, so he was looking for some analysis on the equity indices. So looks like he's pretty happy on that end. But in any event, as far as the Aussie is concerned, so the retracement of the yearly range will always be something of great interest to me. It so happens that that median line off the high now converges right on that 236. So adding further conviction for near-term support here. Obviously, guys, on a rebound, we would be looking to sell again. Okay, the broader premise is that we're testing the upper median line parallel, basically the upper slopes of this range, and you'd be looking for a correction lower. You had some strong divergence into those highs that you made. So on a rebound here, while the immediate focus is for a rebound higher, ultimately, we'd be looking to sell that. Okay, and the bearish invalidation level for Aussie dollar remains 76.43 into 76.51, this region right here. So now that we kind of got the broader levels in view of what we need to see or what we're looking for as far as our key thresholds, here's what the Aussie looks like on the 30-minute. Okay, so there's that rebound. Again, here's where we were yesterday. We did achieve that 75.10 target. We got taken out of longs at that point. Traveled just a little bit higher heading into the Asia session and early Europe before the pullback, finding support at the median line structure of the same slope. Okay, so it's not out of the woods yet. You might come back and test this support again. Remember, as we noted in the report, this is the trend line that you need to clear to validate the upside thrust. And that's only because it is a 4-point touch trend line support. A break of it, tested as resistance, test back the median line as support on that final thrust. This is sort of the region that we need to get through to validate a little bit of a reversal here. Ultimately, like I said, 76.40 into 76.42. Nice range here of which we'd start to look for possible re-entry on the short side. Now, from the swing side of things, Jamie's looking for a little bit larger of a swing to the upside to offer a short entry. Obviously, guys, you know, we're on a completely different time scales as far as the swing trades are concerned. But on that, you know, for the Aussie trade, Jamie's looking to take a much bigger bite of this on the way down, right? So it's a little bit different of a poise here. For me, near term, focus is higher, looking for that rally to offer some possible opportunities to get short on Aussie dollar. As far as event risk is concerned, again, look for today's release at 2 p.m. to shake up all the dollar crosses. Again, it's unlikely we'll get anything new, but that would be the basic event risk that you need to keep in focus for the remainder of the week. There's not much left on tap from Australia until next week. Okay, we get the employment numbers then. Any questions on the Aussie dollar? And let's just bring up the 5-minute chart here and see if there's anything pending. Okay, and you're starting to get a little shift in momentum here. We'll see how the U.S. Open looks like, but a couple things to take note of. First, you're seeing that since the Open of Europe, essentially, momentum has continued to hold 60 resistance, 40 support, 60 resistance, 40 support. So we'll be looking for a break of that near term heading into the U.S. Open. Eileen with a question here says, when you're watching a breakdown or a breakout happen outside the immediacy of the news release, Sterling, how do you manage to decide where to jump in for what you're watching? Just support resistance, RSI triggers, time of day, opening range breaks, etc. Just a gut checks at the breakdown is happening. When you're watching a breakdown happen inside the immediacy of news release, how do you manage to decide where to jump in? Not sure what your question is here, Eileen. Let me bring it to the Sterling. I guess you're talking about the Sterling here. If there are no other questions on the Aussie, guys, feel free to throw them out. Again, looking for a pullback here to get on the long side, ultimately the breakout to offer some short exposure. But let me take a quick segue here for you. So, Eileen, on a trade like this, so we talked about this, I think, briefly yesterday. I can't participate in this. Plain and simple. Plain and simple. If it breaks a major key support, remember, heading into this region, as we noted yesterday, take it back to the radar charts real quick. Here's the British pound from last night. As we were heading into this key confluence region of support, we're looking for momentum to find some support at 30. We're looking for long triggers, right? If the opposite happens, Eileen, and we get a breakdown of that key support we're looking to play the rebound off of, it's a no trade. Very simple. Guys, and it's very important to keep in mind, we have a spectrum of trades that we present to you guys on a daily basis, both on the swing side of things and on the near-term side of things. There's by no means are all of those trades going to be active at all times. And not only that, but like I said, if we're at support, we're kind of looking for the turn, and the turn doesn't materialize, or you get a breakdown, and this was pretty clear, Eileen. There was not even a fake out to think it was going to rebound, right? Momentum just completely broke just below 30. As I always said, I'm never going to be buying while momentum is sub 30. That's when the momentum signature is the strongest, suggesting that there is a lot of downside pressure. It's the recovery above 30 that would have me starting to look to fade the move. So it's so interesting. Something I say every day triggers Siri on my phone. I'm not sure what it is. But does that make sense, Eileen? So yeah, that would be exactly. She's saying that's chasing. Okay, that's what I was wondering. Wait to see where such a thing settles as the smarter move, sterling dollar. Yeah, absolutely. Says yes, it makes sense. Perfect, Eileen. Great question. And again, I mean, if this had been prompted where you got a quick breakdown, then a recovery, momentum kind of recovered above 30, and it popped back above 40.90, that would have been a beautiful long against whatever low the spike low was. But to try to play this downfall on this, that's just sheer and utter chasing. Okay, we're never gonna advocate that. So where do we go from here, Mike? That's the most important thing, right? Okay, let's take a quick look back. So here's what the British pound looks like on the daily chart. Look, this was pretty big. This is the median line structure that dates back to the May and August highs of last year. Has seen some really nice pivots in price, both at the median line and the upper median line parallels. And we're breaking below this here today. So from this point, 140, 139.95 is near-term support. Excuse me, on the intraday chart, there's big support there I'll show you in a moment. One other thing I just wanted to note to you is today's close will be paramount. Okay, basic support trigger off the lows coming into play here. Now this is marking divergence, not typically my favorite triggers, but something we'll keep in mind as price comes into that near-term 139.95, 140 level. One other thing I'm looking for is this former trendline resistance. That confluences as support heading into tomorrow. And the major key support for sterling, guys, is 139.10 into 139.21. 139.21 is an 88.6 retracement. This is a long-dated retracement from the lows that you made back in 2008. Or is that early 2009? And then 39.10 is the low day close for this year so far. Okay, and both of those converge on former channel or trendline resistance heading into tomorrow, Friday. Okay, so for the longer term picture, the daily chart, you kind of know what the key levels are. As far as the near term chart, again, the 140, 139.95 region, so important because of not just the 764 retracement off of the rally, off of the late March low, but it's also an exact 100% extension off the high. So these confluence regions can tend to be very, very nice levels of inflection points. And certainly heading into the US Open, that's sort of the main key region of support you'd want to look for. A break below this keeps the downside in focus. Again, the low day close, 39.10. That 88.6 retracement, 39.20. Next key area of support. Near-term resistance, 140.95 has not changed, followed by 141.75. Very nice pivot in price. Bearish invalidation, unfortunately, isn't until 42.18. That's actually the weekly open. Okay, so the levels are pretty stacked up against the sterling here. This was a big break, a break above 40.95. I would be interested in taking small longs against that level heading towards 41.70 and 42.18, but really we need to clear this formation to the upside to validate the reversal. That being said, you're bearish now sub 40.95. Any questions on sterling? And the sterling docket has on the 8th, Friday, you do get industrial production and manufacturing production figures. Expecting a softer print on both of those, but that's not until Friday. That being said, look for the dollar to drive this mostly. On sterling, would you also look for shorts from that 41 handle? From here, if we rally into here, absolutely. Yeah. So this is the bearish invalidation, right, Eileen? If we get in, or let me take that back. This is the broader bearish invalidation, but the immediate focus is lower below 40.95. So if we head into this region and you start to see some short triggers materialize, yeah, you could try to test a move on that. You're only looking for about 40 pips. My only concern with trying to play that, Eileen, is the fact that the daily chart on a close basis is going to be pretty critical today. So if this dips down and tags key support and we close higher on the session, momentum signature never breaks that trend line, it actually might be a decent low for a recovery in sterling. So I'm a little bit hesitant to do that, specifically since we came into the day looking for support and a rebound here. It's sterling, so it's notorious for the break, recovery, the throw over on resistance. But yeah, I mean, I'd have to see some short triggers materialize into this region, Eileen. One other thing that you want to do, and you don't want to do it here, but just for your caveats, guys, if we end up basing here and the U.S. session comes in, momentum breaks back above 30, and specifically if we get that trigger break, a basic retracement off the high, okay, would highlight some interesting levels. First of all, a basic 236 comes just higher at 111.18 or so. So if it's going to be a simple recovery, Eileen, this is where you would find some resistance and then a move lower. If it is reversing and we made a near-term low here, look where the 38.2 comes in, right along that 618 extension at 41.77. So just to give you an idea of how I would look to play that. So Eileen, if this does materialize where we're moving higher into the U.S. session, this is the zone of which we would look for possible short triggers, but it's also going to be the breakout zone to offer the move back towards the upper median line parallel. Okay, I'm not comfortable putting this retracement on yet because, again, we have no validation that this is a real low here at this point. Oh, okay, that's why you're looking for longs. Right. If we clear it, Eileen, we're looking for longs if this breaks on the pullback. But heading into this region, you'd need to see a short trigger materialize to be able to press it lower. Pete saying, so we should be long at 39.95, 39.40. If this gives out, Pete, and we get a pullback, I would love to be long against that pullback low. So a scenario where you get a rebound here, break through, a pullback into this region, yes, I'd like to establish a long against that low, looking for a final stretch towards 41.75 and the upper median line parallel. Does that make sense, Pete? Again, I want to be cautious with you guys. I don't really want to, Eileen, I appreciate that pullback. Yes, I don't really want to advocate trying to call a low, which is why I'm not long yet, right? On a regular basis, if this was a key support confluence, I'd be looking for a long exposure right against this low. Where we are right now in momentum, and the fact that we've broken a pretty big resistance or support confluence, I'm not going to sit here and try to call a low to this drop yet. In fact, one thing I want to look at real quick, just bear with me. Oh, nice. So this is an exact 100% extension from the decline off last week's high. Interesting. Yes, Tabor, thank you. It says, don't try to catch a falling knife, LOL, 100%. 100%. Pete says, yes, but looking at 100% retracement, I'm not sure what you mean by that, Pete. Of this entire move you're talking about? Yeah, so me and Jamie are both on the same page here. We're looking for a more bottoming here in the sterling, right? So I would be looking, for a rally towards the upper median line parallel, to be honest with you. The fact is, if we close below this median line here today, the chances of that materializing, Pete, really start to dwindle. Okay, this was a big region of support. Again, we'll have to see what the daily chart closes at, but if we do base, and specifically, remember, this is the near-term bearish invalidation. So if we clear 42.18, we clear the upper median line parallel, yes, I am absolutely looking for a new high in the British pound. In that scenario, right? Right now, we're still in the downtrend, looking for some more basing before we can start to attack the long side. Make sense, Pete? He says, yes, thanks. All right. Love the enthusiasm there, buddy. All right. Good discussion. And definitely we'll be taking a look at the pound. Again, it's on the radar chart because I'm personally not operating in it yet. I kind of want to see a little bit more strength start to materialize off that 140 handle before I start to get too aggressive on it. But that is the British pound. Before we start to go into the rest of the radar charts, I just want to complete some of the setups from last night on the intraday update. So Aussie dollar, we went over. Dollar CAD, specifically we have the Department of Energy crude inventories on tap at 10:30 Eastern time in the US. Here's what dollar CAD looks like on the daily chart, and then we'll go into the 30-minute. Now the deal here is this. It's finally starting to materialize. We've been talking about this trade for weeks and weeks. We got all that divergence into the lows. The false break that we made into the close of March trade rebounded and reversed. We talked about this yesterday perfectly off the October low day close, with the trade really maintaining above that 29.65, 29.76 level of support on a close basis. Okay, we saw a nice, clean, perfect rebound off those levels. Now, yesterday's highs, ladies and gentlemen, came right into the median line off the low. Okay, and we pulled right back. We also had a tag of 33.14. What was the high? 33. The high was, or 32.17. 32.14. What's 32.14? Well, it's that low day close that we made here on the 11th before the final break that took us into the low for the year. So you had a really nice region of resistance there. We got a kickback. I wasn't looking to play the kickback per se. I was hoping, and as we noted yesterday in the report, I was hoping to see this pullback give us a little bit deeper of a cut into this 30.80 level, of which we would possibly look for some long triggers again to try to press the long. We didn't get it. In fact, that 31.27 level held as support. I got all frustrated and just went to bed. Didn't get a position on this. And here's the rally. Again, looks like it wants to fail ahead of that upper median line parallel. Looking for a rally into this region. If we clear it, we're going to continue to favor the long side. You won't have any positions on. The ideal scenario, guys, is that we get a pullback towards the median line and then initiate new longs. If that doesn't materialize and we just break the highs, we'd need to wait for a pullback. So the same scenario that you're looking at with the sterling, right, where the trade doesn't give us the bounce we're looking for, runs through support or resistance. In that case, we can't sit there and try to chase it. We got to wait for the pullback. And that's the hardest part with a near-term trading strategy like ours, guys. A lot of it's just wait and see. A lot of it's just monitoring the market, looking for the conditions that are right. If we miss these moves on a breakout or specifically a news-driven event, you got to just sit on your hands. The market will always provide more opportunities. And, you know, specifically with what me and Jamie do, we put out all these trades every day. We miss a lot of them personally, and that's the name of the game, right? I'd rather miss the trade than get there caught chasing it and riding a loser. So, Eileen, yes, waiting. Yes, she says. Yeah. Patience pays in this game, okay? Patience pays. So for the dollar CAD, you know, I don't really have anything appetizing for me right now. I do think you get a pullback to offer some long exposure. If you do, the levels are pretty clear here. Just to put things in perspective again, why this is such a critical area of resistance, we talked about this yesterday. Basic trendline resistance off the high from the 25th of January. That trendline supported the same slope, caught the lows. Trendline resistance, catching the highs. Any questions on dollar CAD? Okay, we covered Aussie dollar, dollar CAD looking lower than higher. We covered that. CAD yen was next on tap. Very similar scenario. By the way, here are the crude inventory numbers. I just thought I'd provide them for you today so you kind of know what the expectations are. Also, just wanted to highlight that not only do we get the minutes at 2 o'clock, but we also get some members of the FOMC speaking, specifically Fed President Mester, who will be up on at 12:20 ahead of the minutes. And later tonight, Bullard will be making comments in St. Louis. Again, you know, most of these commentary guys are just speeches that they give, not necessarily monetary policy based, but a lot of times you do get their personal opinions on whether they think, hey, yeah, we should be moving higher on rates, we do need to normalize, or whether they're on the camp of, you know, there's just too much risk out there right now to be moving higher or tightening policy rather. So moving right along, CAD yen. Here's what CAD yen looks like or looked like yesterday. Again, very similar scenario in where you're coming into some interesting support barriers. Here's what the CAD yen looks like now. Really clean as far as the level is concerned. So this 83.35 into 83.55 region, okay? You're basically looking at a 50% retracement. This is from the advance off the lows they made in February. You have the lower median line parallel of the current operative slope off the lows. Also, if you just get rid of the parallel, guys, this is just basic trendline support. And you also have this slope line, which is the parallel of the operative slope we're looking at off of the June highs. If you extend it off the high they made in late January, early February, comes in right in this region. So we're checking a pretty big support, okay? And a break below this really opens up the floodgates. I think 82.39 will be our initial target. It's a basic 618 retracement, but more importantly, right above the 81 handle, 81.19, you have the 764 retracement and the broader median line that we've been working with for well over 6 months now. So what are we looking for from here? Well, basically you're coming into a key support. So you're looking for a possible shift in momentum. You're looking for a break above 84.31 is what we noted yesterday, is sort of the breakout level to give us the conviction to play the upside. But at the end of the day, I'm not touching this until we either see a pop out of this tight descending channel formation, which we've already rebounded off of, or if we do break the lows, look for recovery back towards excuse me, that 83.35 level, 83.55 level, again, to once again press some shorts into the subsequent downside targets. 82.76 is just a soft pivot here. Swing low that we made back in February towards the end of the month. You also had a nice pivot in early February on the 22nd. That comes at 82.76. And again, that 618 retracement comes just around 82.40, 82.39. So this is a big break. If it materializes, sayonara. You're likely to see some more downside play here for CAD yen. Remember, the basic premise of the trade, guys, we've been following this one for weeks, is the reversal we got at a critical resistance barrier. Okay, so the reversal was textbook. It had a lot confluenced right onto that region, the pullback at initial support. So even if we do get a reversal or a rebound off this region, ultimately you'd be looking to sell. I know on the swing side of things, we're looking still for a short position near 85.10 if we get it. Thinking right along those same lines. Okay, if we get a swing to the upside on a scalp basis, if we start to base here and you see a topside pop, I'd be interested in scalping some longs, but ultimately we'd be looking to get short as close as we can. Jamie's looking for an entry at 85.10. The bearish invalidation for the scalps would be 85.50 into 85.48. Okay, 50% retracement of the decline here, just really near term. This is a basic 236 off the low. And those same slopes that we've been following off the highs, the median line comes right on that region. Any questions on CAD yen? I know this was something I was checking out earlier today. Let me see how it's looking on the near-term charts here. Okay, so just to give you a little quick look at what I'll be looking for into the U.S. Open. First of all, you have a really nice risk to reward here if the U.S. opening range happens, or the U.S. Open preserves that low from London. Okay, because right now you're looking at a stop at about, what, it's like 10, 15 pips. You're basically looking for 30. So the risk to reward is there. We just need to see a little bit more of a long trigger start to materialize. I do like the fact that momentum is turning ahead of 50 here. I'd possibly be looking for another spike lower and then a rebound here to get back on the long side for CAD yen. Again, ultimately, we'd be looking to sell that. Okay, too soon. Hi, Mike. Are you covering sterling yen today? Looks like it's a bit like yet it's a what's that? It's yet to find a bottom. Amir, for sterling yen, we just covered it. Oh, sterling yen. No, we haven't. I'm sorry. So we did cover the sterling. We talked about that trade. Again, really mindful of the key support barrier that we're trying to break below. Sterling yen looks like this. Okay. Actually, guys, did we cover sterling yen? I can't remember. Here's what sterling yen looked like yesterday. I don't think we did. Okay? And here's what it looks like here. Thanks for that. So, the same thing that we were looking at with the pound was coming into a major key support barrier, and we broke right through. Same thing here in sterling yen. The basic barrier was this 88.6 retracement. Again, 88.6 in and of itself is not the most critical Fibonacci level. It is a true fib level, square root of 786, but the fact that it confluenced or that price was also finding support along the lower median line parallel for this formation, which has pretty much called some major turns in price for the last 5 weeks. Okay, here it is. The median line, resistance, 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 whatever the hell that is, right? And then you have some sliding parallels, support, resistance, support, 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 break, instant resistance. Same thing with this parallel, same thing with this parallel, right? So we were sitting right here. Momentum gave us divergence into that low last night that we made right ahead of, right into the U.S. opening range. You had price action making a lower low, the oscillator making a higher low. There was a near-term trigger here that also gave out. So I was looking for a nice rebound off this region, but we noted in the report that we would need to see a break above 56.95, 56.93 to validate the reversal. And in such a scenario, we'd be looking for 57.60, nice pivot in price, and this key confluence region yet again, where we bottomed out a few weeks ago. Well, price didn't give us any help on that. We broke right through the U.S. opening range lows in early European trade. Excuse me, and right now we're testing the actual lows of the year, right? So here's what the daily chart looks like. Look, at this point, I don't have anything from a scalp standpoint that I'd be looking or encouraging you guys to get involved in. At the end of the day, I still don't trust this thing. I do think that a lot of this is also being propagated by the fact that you're seeing that yen strength start to gather pace with the pullback that you're seeing in the sterling. That said, this slope line comes to view as sort of a next downside target if we clear that low. Okay, that brings you down to like 53 handle, essentially, almost 200 pips away from where we are now. One other thing I would want to take into consideration, clear this out, I guess we can leave that still, is just an extension off the highs here. It's 53.40, near-term target ahead of that. But at the end of the day, it's make or break here, Amir, for sterling yen. I still would like to see this thing higher. But again, we can't try to catch a falling knife. We are at support. We are still marking some divergence, although, albeit I said this before in the week, these divergence signals sub 30 and above 70 are going to be your weakest. So I'm not ready to take a trade based on that yet. But certainly continues to suggest that the downside momentum is waning. An interesting thing I just wanted to segue in. I saw someone on Twitter. I'm not sure who it was. Jason, are you in here? You were asking about on the SB Squawk, do we take into account sentiment? Absolutely. Absolutely, we take into account sentiment on a whole different host of factors. You can look at, I know Jamie's really big on headline sentiment. So covers of magazines, headlines that you see when you first log into any financial publications, whether it's Reuters or Bloomberg or CNBC. These tell you what the market participants are looking at. By no means do you want to take financial advice from them, but you do want to gauge sentiment from them. Okay, anything that you see on these news publications, guys, if it's being broadcasted, the trade's probably already over, right? But certainly a focus on what the market themes that their markets are paying attention to is very important. If you're trading with FXCM, SSI, I'm not a big fan of using SSI as far as intraday trading because certainly it's not going to prompt me or deter me from taking a move on an intraday level, but it's something to take note of. In fact, if we look at SSI right now, why don't we just take a quick look at SSI for the sterling yen? Here's what it looks like. right? And I like to look at SSI specifically when we come into these major key highs and lows. And one thing I would highlight here is that the current SSI that you see here in green shows retail net long positions coming pretty close to extremes. Now, when SSI hits extremes, guys, that's not necessarily when you want to fade the move. Typically, SSI is a contrarian indicator. So if most speculators are long, then we want to be short. If we have retail crowd speculators are short, typically you want to see the longs, or you want to be on the long side. But when we start to hit extremes, typically these are indicative of near-term highs and lows in price. And all I want to note is this. Again, here we're now back above positive 2. So 2.1 traders long for every one that is short. Price is at an extreme. SSI is heading into an extreme. What you want to look for in this, guys, is when SSI starts to come off the extreme. Typically, that's telling you that the momentum is waning. So I'll be looking at, this is just another gauge of sentiment. By no means do I put any emphasis on one singular tool, indicator, or sentiment read, but certainly puts things in perspective, right? So as traders start to close out those long positions, as the market moves against them, a lot of times that'll be a nice tell on a near-term shift in price, as it were. Amir, does that help as far as the sterling yen's concerned? You're at a major support. If you're holding shorts, I'd be looking to take something off the table at this low and bring your stops back to break even or better. If you're looking for a new position, I wouldn't really be doing anything here, guys. You'd be looking for either a drop into this median line for a possible long rebound here on a scalp basis, or on the 30-minute, if we do finally manage to break through 155, and specifically yesterday's breakout level, 156.95, that would validate for me at least that we might have put in a near-term low. Amir says, thanks, Mike. Yeah, thanks. All right. Cheers on that. So that is pound yen. Pound is covered. CAD yen covered. Dollar CAD covered. Aussie covered. Aussie Swiss. Who is that for? Where's my man here who asked about Aussie Swiss? Minho, was that you? Oh, Tabor. Aussie Swiss daily if you have time. Sure, man. Here's what Aussie Swiss looks like on the daily chart. And I know you're asking about this. We covered this and we were scalping the heck out of this earlier in the year. Once we broke through the yearly open, it was kind of an easy play to the long side, looking to target the yearly high, or the December highs. But now that we've broken back below the yearly open with yesterday's move here, 100-day moving average seems to be offering some near-term support. But I'm still mindful of the fact that you were likely to see another low in this near term before we make a rebound higher. Let's see what the scalp chart looks like. Hmm. 72.85 level for a short entry, says Tabor. I'd be interested in a little bit higher if we can get it. Obviously, the yearly open does hold extreme technical significance, so that would be the first resistance region I'd be looking for, Tabor. You're spot on there. But just the basic premise of your old school sort of classical technical analysis, a break of a trendline support or resistance, go back to check it as resistance, would leave us on a possible rally back towards 73.40, which is the March high day reversal close. Okay, you can see that here, 73.40. Okay, that was the high day for the year. It was an outside day reversal, and certainly the close was support for over a week. So for me, let me also put this perspective for you. Look what you got there. Basic trendline resistance off the highs converges right on that region as well. He says, got ya. Yeah, Tabor, does that make sense? So sort of that would be a nice region. Or let me put it this way, Tabor. This is going to be for me the bearish invalidation level, straight up. If we break above that, I'd expect to see a run right back into this key resistance. By the way, 74.39 is the high day close for December of last year. And this confluence region of resistance, again on a closed basis, was basically rock solid resistance. Rock solid. Trigger support. Yeah, I see that you can see a little rebound here. Let's look at 30-minute real quick once again. I just want to see if this, obviously we just did this on the daily chart. Looks pretty decent. And I just want to see if we have any confluence with this extension off the high here. Okay, that's not going to offer any help at this point. Okay, 2-point touch. Nothing too crazy on it. A nice little embedded channel here. So this is what I'd be looking at, Tabor. Feel free to take a snapshot of the chart if you need it here. But this is what I'd be looking for. So the former channel, lower median line parallel. Again, like I said, with the weekly open, that's sort of the bearish invalidation level. I'd be looking for a rally to sell. This is going to be a big region, obviously a pivot, and the yearly open. But I wouldn't leave it outside the realm of possibility to see this thing whipsaw towards the highs. Remember, in Aussie dollar, Tabor, we're looking for a rally also to offer a new short exposure too, right? So sort of fits the bill pretty well with the broader Aussie themes that we're working with. Hope that helps. He says, thank you. Got it. All right, Tabor. Cheers on that, my man. That is Aussie Swiss. Robert Bearden, welcome aboard, my man. Wants to look at Kiwi Yen. I think we touched base on this really quick yesterday. I want to take a quick segue before I do, just to show you the Kiwi dollar here, Robert. We talked about this yesterday. And guys, remember we added this median line formation early in the week? It's still calling price. And typically when they're this tight and this narrow, they don't last very long. But here we are for a fourth consecutive day within the confines of this same really tight formation, giving further credence to that major resistance we talked about yesterday right here at the 68 handle. So last night we did run into it. We failed. Now that same exact confluence Fibonacci level coincides on the upper median line parallel. A break here would shift the near-term focus higher. Ultimately, I don't really have a very strong bias on the Kiwi. As far as I'm concerned, I was looking for the stretch into 69.70 handle here. Big region of confluence support, resistance rather. I was looking for a stretch into this to offer some nice shorts. We didn't quite get into there. We turned ahead of it, and then we broke back below that reversal day close from October. So I don't really have a strong bias on Kiwi dollar for this, Robert. So as far as Kiwi yen is going to be concerned, it's going to put me a little bit on a more shaky path. For that, again, watch these levels here near term in the Kiwi. A topside break above 68 does give us a near-term recovery in the pair. And these are the retracements I'd keep into account. Remember, we tagged this yesterday on this retracement. We said, look, we don't have any conviction that this is necessarily the low. I think this is what we were looking at during the webinar yesterday. And we said, I don't have any conviction this low. We came back, tested it again after the webinar. It held. We broke above the median line. Now I can tag on this retracement with some conviction. And you can see that the 236 converges on that upper median line parallel. Okay, and as far as support's concerned, well, that's just as easy as well. The median line also converges on the 764 retracement of the advance. So with that sort of picture in view, Robert, to take a look or a segue into Kiwi yen, looks like this. A little bit of a different story because all this is doing in my mind is just in a consolidation. So if you take a basic trendline support off the lows for the year, specifically the lows that you made there in February, you can see that the low we made yesterday was literally almost to the pip on that trend line. A broader zoom out. A broader zoom out. Here's the median line formation I'm working with, or I've been working with pretty much for the last couple of years. A sliding parallel of that same slope, literally almost caught the exact low back there in February. And if we break this consolidation, that's my only concern of why I'm not even looking at this right now. Even if it breaks this consolidation. So let me just take a step back. Typically, these consolidations, guys, triangle consolidation, wedge patterns, typically, historically, they're continuation patterns. So if the broader trend is up, you're going to see a break to the upside of the pattern. If the broader trend is to the downside, typically these consolidations will give you a downside break. My problem with that is even if you do get a downside break of this, you still have that long-dated sliding parallel to deal with. And I'm not really sure what I would be looking to do on a near-term prospect there. So Robert, I was looking for who asked that question. So Robert, does that help, man? You're coming into some support here, but I just don't know if it's something that you want to operate on. I'm no interest by any means of getting short this low, near the yearly low, at the monthly low. With the same respect, you're trying to catch a fall in life, definitely here if you try to press the long at this point. So here again, that basic trendline support. Graham says, quite a lot of divergence on Kiwi yen, the 5-minute, but no trigger or obvious support. So I do have support right here, right? Graham, there is a basic trendline support off the yearly low from February, which we're basically tagging right now. Let's clean this up a little bit. These retracements are rather messy at this point. Eileen says, when you get a chance, what's your decision thought to use 764 versus 886 on fib pairs? So I don't really replace the 764 with the 886, Eileen. The 764 I would use to replace the 786. 886 is just another derivation and sort of the last ditch effort. So if you see a break of the 786, your next level down is an 886. Now, it is a retracement that I tend to bring up a lot more on daily charts. I can show you a couple of instances where 886 retracements have caught massive reversals. There's nothing that stands out, Eileen, of it being a special fib or anything. It's just your next level of descent. So if you clear the 764, or if you're looking at the 786, your next level down is your 886. Now, as far as using 764 versus 786, 786 is the actual fib number. Okay, 764 is simply 1 minus the 236 retracement. So it's not a true fib. 786 will be your true fib. However, Eileen, whenever I'm placing a fib, we always want to look back and see what price action is doing. I don't want to just, this is a 38.2, so I'm just going to blindly target this 38.2. No, with a 618, it holds merit in it being that golden ratio that happens everywhere in the universe, right? But when we're talking about the 236, the 38.2, the 786 or 764, I always want to take a look back and see what price is doing. So here's a perfect example. I'm not even going to touch the chart here, Eileen, of this retracement here. I'm using a 786 retracement. Well, why am I using a 786 retracement here? Why wouldn't I use a 764? Very simple. The 786 gives me a perfect pivot. Here's that low that we made on the 4th of February, and it also caught the exact high that we made on the 8th of February. So to me, inherently, I'd be looking at this level. It just so happens that there's a fib there as well, adding conviction. All right? So I can put this into a 764, apply, right? What does that give me? Well, didn't quite catch that high, didn't quite catch that low, didn't quite catch that high, was really messy along these highs, bringing to a 786. Oh, now it caught that low, now it caught that high, closer to the highs here. So what fits price action, right? And I don't want to be in the habit of telling you guys to find the fib that fits price action, but certainly when it comes to little nuances like the 764 or the 786, typically I'll just look at what in previous historical price action. Obviously, when you're drawing this retracement, you don't know what's going to happen here. You don't know what's happening on the way up. But when you attach it, you want to see that previous price action has shown you some inflection points around that region. Does that make sense? Yes, see if it's capturing price action. Oh, cool, I see that. All right. Yeah, it's very important, guys. A lot of people will fall in love with an indicator and they'll just blindly follow it. We have to see that price action has respected these levels. Because at the end of the day, no indicator is going to hit, is going to bat 500. So we want to make sure that price action is speaking to us. And as we always say, price action is the single most important indicator. Okay. I think we covered all the questions. I got the Aussie Swiss. I got Kiwi Yen. Any other pairs you guys want to look at, feel free. I do want to look at the divergence that you're looking at here on Kiwi Yen. Yeah, you're absolutely right. You're absolutely right. You're getting some nice divergence here, specifically on the 5-minute, more so than the 1-minute. But here's what Tabor was talking about. Or I'm sorry, this was what Graham was talking about. Right? Price action making a series of lower lows. Remember, it's all about the close. So bring it to a line chart. Lower low, lower low, lower low. Series of higher lows. Absolutely. The trigger is the problem here. I see what you're talking about. No trigger. Obvious support, I'd be looking at that slope. But the trigger to get the long side trade, not quite here yet. Let's see what the U.S. Open offers. And also keep in mind one thing. I don't want to be too aggressive on yen shorts, right? Sort of my little concern there. Graham says, okay, thanks. All right, guys, we will wrap it up here. We got the open of U.S. markets in just under 2 minutes, so I got to run. As always, keep in mind that we have Mr. Jamie Setley, who will be on board today at 1 p.m. for his midweek strategy webinar. I'm sure you guys always will enjoy that, so keep that in mind later today, and I will be back on board tomorrow morning, 8:30 Eastern, for another intraday update. Guys, have a wonderful trading session. Thanks for that, Eileen. I will see you tomorrow morning. Cheers.